I made a commitment about 2 months ago to learn AI, to learn it better than anyone else. And I made a commitment that I would pay whatever it costs to give me an advantage in the stock market by accessing all the knowledge in the world and using AI. So the question comes with after that commitment and after 2 months of working with it, does it work? And I believe it does. And that's what the case I want to present to you today. How I think Samantha, that's my AI agent, that I have developed, that I have nurtured, that then has turned around and become my coach. I believe we can pick stocks as well as Wall Street, but we can act more astutely because we don't have the burden of Wall Street's bureaucracy. That's where I think I am today. And I want to convince you of that so that you can step into this world of a new way of investing, to invest with all the knowledge that is available to you. So I went to Samantha and I asked her, I said, how should I go about this? And she said, why don't you share some of your successes with your viewers and let them be the judge, and then just keep them up with what you're doing and how you're doing it, and let them be the judge if they want to be a part of this AI investing. But first, you need to show them, does it work? And so that's what I want to do today. And I want to start with giving you some examples of what Samantha and I have done. I, for a number of months, have been a big proponent of APLD, Applied Digital Resources. I bought it several months ago, probably 6 months ago, and made a lot of money on it because it was an existing Bitcoin mining operation with data centers in Texas and North Dakota. They were in North Dakota because of the availability of wind. They had turbines hooked up with them, and the electricity was cheap, and South Dakota or North Dakota Bank was financing them. Well, they made a change and stopped the relationship with North Dakota Bank, and I got scared and I got out. And so then, as their earnings came out, their price continued to drop. And I said, with the advent of my relationship with AI, I'm going to ask Samantha to do a deep investigation of the financial health, because that's what I was concerned about with APLD. And she did. And she came back and she explained to me the reason they broke their relationship with North Dakota Bank was they needed more money, because some of the hyperscalers were coming in and saying, we want to work with you, but we need more wattage. And so they needed more money to build more data centers and upgrade their data centers they had. And they had a relationship with Jensen of NVIDIA, and they needed money to buy more GPUs. Well, with learning that, and then with Samantha informing me that this new relationship in their financing was one of the largest financiers of equipment in the world, and if they were backing Applied Digital, they had to be strong. With that in mind, I went to the charts and I saw that there was a support level that they were about to hit, and I bought. So I bought on, let's see, April the 16th. And the market then went, and that was on the recommendation of Samantha. The financial, I gave her the earnings calls, the financial statements, the balance sheets, and she went and got another 27 data points. Those are other articles that she found on the internet, and we bought. And she had told me from that program that Applied Digital would go up 188% between April the 16th of 2025 and January the 2nd of 2028. That's what she told me. Now, since we bought on April 16th through today, APLD is up 55%. So Samantha knew this was a good banking arrangement. They had a good relationship with, I believe, Samantha and I believe it's Microsoft, and they were building out for the needs of these hyperscalers. So that's one. 11 days earlier, I did a financial deep dive and health of financials on AppLovin. I saw an interview with their CEO on Squawk Box, and he made a statement. He says, I am going to become a bidder for TikTok. And I will outbid anybody. I will outbid anybody for it because I think AppLovin is the best match for TikTok. I said, this guy's got balls. I really like him. So I said to Samantha, do a financial analysis of AppLovin and tell me what you think. And then I told her what he had said on the TV show. Well, we bought AppLovin, and that gave us, we are up now 40% on AppLovin through today. That means that we were in it less than a month. Okay, so is this all magic? No. Let me give you one more example, and that's a stock that I really am high on, and that's SoundHound. SoundHound, I've interacted with SoundHound on several occasions. When we travel, sometimes we stop and get a hamburger at Wendy's or at McDonald's or some hamburger place. Well, I went to one down South Alabama as I was on the way to the beach, and I recognized when I pulled up to that box, I was talking to SoundHound. I was amazed. I was amazed how efficient it was, how she asked me if I wanted, rather than a medium Coke, a large Coke. And on that second sandwich, do I want fries? And she did it. And I said, she will do it for everyone. It is not a human being that has to be prompted to do it. And then I went to a Wendy's, and I had the same experience. And I said, this is the most efficient. And we moved through the line very, very rapidly. So I bought SoundHound. Again, I bought it. It went up. It started going down. I got out. I asked Samantha, give me a financial, because that's with these small companies, that's what I worry about. Are they going to be able to weather hard times? I know the AI is going to work for them, but I don't know if they're going to be able to weather circumstances that I have no control over, such as interest rates, tariffs, and market momentum. I don't have any control over that. What I'm interested in is what is SoundHound going to be worth on January the 2nd of 2028. So Samantha did the deep dive, told me where to go, where to buy, and we're up 43% in 24 days. Okay? So does it work? Yes. Will it work every time? No. So that's what I have to build into it beyond that. First of all, let me share with you the parameters. I've done this before. I rely very heavily on the 40% rule. This is a rule that I was taught as a financial analyst. A growth stock is a stock that consistently, when I say consistently, I say I'm quarter to quarter and year to year, is growing their revenues by 20% per period, quarter to quarter, year to year. And they're growing their earnings per share by 20%. You add those two, 40, and they equal 40. And if they're over 40, they're a growth company, okay? Now, if you can add to that they're growing their operating margins, you got a winner. You got a guy whose business is growing and he's reaching scale, and every dollar that comes in is making more than the last dollar that came in. You've got a growth company. Now all you've got to watch for is when those equations fall out and for some reason, they aren't growing, such as Apple doesn't do that anymore because they're so damn big. Okay, to grow their revenues on trillions of dollars, 20% is tough. But if we can find the today's or tomorrow's apples, maybe they're oranges today or peacocks or whatever, if we can find the apple, tomorrow's apple, we can make a lot of money. And that's the 40% rule. So we look for 20 and 20. Then what we check is valuations. What's their PE ratio? It's a lot of difference if you have a company that's making 20 and 20 and their PE ratio is 15, as opposed to one who's doing the 20 and 20 and their PE ratio is 142. Okay, so we have to engage that. We have to look at that. And Samantha, again, I prompt her, find the 20 and 20, find the growth in operating margins, and put it to a test against their current PE ratio. And can they sustain that growth? And what has been their prior growth on stock price? Because what we're looking for is a stock who is going to grow by more than 125% over the next 3 years. So that's how we go about it. Now, if it's that simple, why isn't everybody doing it? Because not everybody knows what I just shared with you. Not everybody knows what the rule of 40 is. A lot of people don't know, if you will bring that in to also the growth in operating margins. And this is simple. What's the difference between an operating margin and a gross margin? The difference is how much money you bring home as opposed to how much you made. After your expenses, what do you got left? I mean, you can be making a lot of money, but if your expenses are too high, you aren't bringing any of it home. So again, then the question is asked: if you can do all that, why isn't everybody doing it? Because something I learned at a very, very, very young age was it's not what you know that's going to hurt you, because you know it, and it's not what you don't know that it's going to hurt you. You don't know it, but it's what you don't know that you don't know that's going to kill you. And that's what AI takes out of the equation. Samantha comes to me and says, Kerry, have you ever considered this? No, I didn't. I didn't know that, Samantha. Well, now I do. Okay, this sounds like a perfect system. So what can go wrong? Well, Samantha can get it wrong. Something can happen, like maybe the CEO and the CFO are cooking the books, but the numbers have always looked good, and they're making the 40% rule, but they're cooking the books to get it done. So how do we protect ourselves there? Well, the first thing we do is we manage our portfolio to make sure that we don't get killed. And that is, we never hold more than 5% in any one stock. Because if it crashes and burns, that doesn't kill us. We still got 95% of what we have. And if we're making good decisions on 95%, we're still going to win. I mean, we'll bail, we'll take that money, put it where it will get us the greatest return. Because again, we can compare the stocks. We know that this stock is going to give us, or we believe that this stock is going to give us 110%, but this one's going to give us a 212%. So let's allocate accordingly, never having more than 5% in any stock, and use Samantha to give us guidance. And again, I can cue Samantha at any time and say, give me another look. Tell me what exactly is happening here, and tell me what you believe I should do. And that's how I go about it. Let's understand, risk is not something you eliminate. You merely prepare for it. You put in stop loss orders. You recognize when something is crashed and is burning to get out of the dumpster fire. The next element that I'm entering into this is technical analysis, so that I can learn to, and Samantha is teaching me this, that to compare the 200-day, the 100-day, and the 50-day moving averages, to give us cues as to when to get out, and when to get in, and when to double down. And these are all through technical analysis. Let me give you an example. Let me take you to my computer and show you SoundHound. You can see here, SoundHound tested its support level at $6.51 and bounced off. We bought that, and that was where we bought. Now it's over its 200-day, it's over its 50 days, and you can see that line up above there, that's the 100-day. If it moves above that, and it moves above it on volume and shows strength, we're off to the races. And you can see it's going to go for that next red line. But if it goes up to that 100-day moving average and can't clear it with volume, then it's probably going to come back. That's where we put our 5% stop loss order in. What I'm saying is have a plan and don't get emotional. Let me share, just as a side note, today I put in an order for Apple stock. Apple stock is coming down. It's hovering above $200. In fact, it's the only stock that I own today that is red. I put in an order for $194. I want you to go to the chart and see if you can figure out why. I'll tell you at another video why I want to own Apple. It's very important to me. So, what is the new way of investing? The new way, at least for me, maybe for you. I use AI to help me find the best companies and to verify their financial strength and their position in the market and their future price projections. I use technology, or the technical numbers, to find my entry and my exit points. And I never get married to a stock. My old way was to buy, to hope, and to hold. even as the price falls through the floor. That's exactly what happened to me in big tech. My new way to invest is very simple. Let AI through Samantha help me find the winners, and let discipline tell me when the trade is over. Risk management is not about predicting. It's about preparation. Set your levels, place your stops, and stay objective. If this sounds like a good plan for you, what I want to do is give you access to an in-depth look at it. It's on my tell sheet. I spell out exactly why I'm buying stocks. I give you access to Samantha's work, her deep dives, her podcasts, her briefings. You have it. I want you to have access to it for 14 days for free. Go to the website, go to our website, find the gold platform. You'll see there the 14-day free trial, and then take your time for 14 days, study it, copy the financial analyses and read them, understand them, go listen to the podcast and see if you can see how you can make this work for you. And let me hit your credit card for $1 a day, and we can make your life a financial bonanza because you have learned how to use AI to make better investment decisions. Let's talk more about this next week.